Thank you for the nice words, Manuel. So welcome everyone. I see Marcus is also already here. Thanks for that. And then Lucas is in Frankfurt. Okay, amazing. So the panel is complete. Good to have you here. I think you have all been on stage already today, but we will still do maybe a very short introductory round. So everyone maybe one sentence about himself. Manuel has just introduced me, so I will skip myself and maybe hand over to Lucas. Can you maybe in one sentence again, really briefly introduce yourself?
Sure, thank you. I'm Lukas Weniger and I work in the digital banking department from Bankhaus von der Heid. And the services from this department are tokenization, custody, and very interestingly, payment on ledger. So we are one of the first who actually offers a digital programmable euro in Germany.
Thank you. Max, do you want to go on?
Yes, so Maximilian Forster, already been on stage this morning, co-founder from Cash and Ledger. Cash and Ledger basically provides payment orchestration services with the integration of a programmable euro, but also with other payment services to basically enable our machine economy to derive into new business models, such as pay-per-use is one of them, but also other payment orchestration methods.
Thank you, Max. Then let's go on with Radko.
Hi, I'm Radko Albrecht. I'm the founder and CEO of Bitbond. Bitbond, we're a technology provider primarily for regulated financial institutions such as Bankhaus von der Heid, which is one of our partners. And we provide banks and other financial intermediaries with software for asset tokenization, digital asset custody software, and on-chain payment software so that banks and other intermediaries can issue a digital euro or other digital currencies.
Okay, and last but by no means least, Marcus.
Hey, hi, I'm Marcus. I'm a manager with DeFi, so DeFi is a consultancy, and I'm work in the blockchain business unit, and we help clients to build like a blockchain solution. So it's ranging, let's say, from this kind of novel capital market infrastructure to say cases in mobility and industry. So that's from my side.
Okay, so thank you to the round. So we have a distinguished panel here, and we are going to discuss a topic that kind of rounds up the day a little bit, because we have talked a lot about the digital euro, what it is, what are possible use cases. And now in this panel, we are asking the questions, what are actually the hurdles for the digital euro to go live as soon as possible? And my plan was to still start, let's say, with the first 5 minutes to reiterate again from the view of the panelists here, why do we actually need a digital euros and what kind of versions of a digital euro to still do already exist. And then in the second half, we can discuss a bit about what are the advantages of and disadvantages of current forms of the digital euro, and what do we maybe need in the future in order to really have this seamless, smooth delivery versus payments and all these kinds of use cases. So let me maybe start with Radko. Can you maybe explain from your point of view why we need a digital euro?
Yeah, I'm very happy to elaborate. So, of course, there's plenty of use cases out there, and I'll just describe our perspective where our technology is typically utilized, but that's definitely not everything. We come from the financial services and the financial market side, and we care a lot about tokenization of assets such as securities, bonds, equities, funds, and also real estate and other real assets. And if you have a security that comes in token form, such as a bond or a stock, then of course you already gain a lot of benefits in the settlement process. However, there's of course always two sides to the settlement. On the one hand, you have the asset transfer from one owner to a new owner, but then on the other hand, you have the payments lag of the transaction. And when you do that in a traditional way through a bank transfer, for example, then there's a disconnect between how quickly and how efficiently you can settle the asset and how quickly and efficiently you can settle the payment. And so our goal is to provide settlement services where also the payment is happening on chain and specifically on the same ledger, on the same protocol as the asset exists. And when we achieve that, then the advantages is that you can wrap a settlement transaction of a securities transfer in what is called an atomic swap. So you can bundle both sides of the transaction into one transaction, and the payment happens directly in reverse of the asset. And this might sound almost trivial to people who are familiar with blockchain technology, but in financial markets, this is a huge step forward, because typical settlement times are T+2 in less liquid assets such as syndicated loans or leveraged loans that
Okay, I believe we have lost Radko. So let me quickly summarize what he has said. So as soon as the token is on a blockchain, we need the euro on a blockchain in order to make the trading as seamless and smoothless as possible. Maybe let me follow up. Radko, sorry, we lost you for a couple of seconds.
Okay.
I think we got your main point. I will lead over to Marcus with a very similar question. Maybe Marcus, if you could summarize again your very interesting talk from the perspective of where does the digital euro make the whole pay-per-use case more efficient compared to the euro we have today?
Yeah, I mean, everything is, I think, is about from my perspective, about automatization, because today I can send data really quickly, but if it comes to value, to money, things getting really slow. I mean, there's some systems which are pretty quick, but I don't have a system where I have both kind of components together. So I can't have, say payments in the same system where I build my smart contracts, or build my business logic. So the completely today is separated, and I have to build bridges, and things getting really complicated, which excludes a lot of use cases, and also which makes things really expensive. But if I would have a system where I can program my business logic like a pay-per-use case, where I say, okay, I have a machine, some IoT device or whatever, connected to my network, and I want to pay for it, I need a kind of connection between payments and logic. So this is something which, a digital euro, with additional feature of being programmable, can realize. So, I mean, surely only a digital euro, it's really fine to have a really nice network, but you need a further aspect to say, okay, it's programmable, and you can have your business logic somewhere, and you can completely automatize, your payment streams. Because in the future we will have, I think, more machines than actually humans, and we probably also have machine-to-machine payments. We will have machine-to-person payments, and all the kind of combinations of it. So we need a kind of new infrastructure for the euro where we can do that. Because other countries are already working on that, and we should go ahead with that too. Because it's really essential for all our economy, because all the payment processes are really kind of complicated and slow, and money is just bound by that.
Okay, thank you, Max. Let me turn over to you. This is a difficult question, but I also know that you are capable of answering it. Can you maybe give us an overview of the already existing versions and maybe soon to come versions of a digital euro? So we always talk about a digital euro, but can you maybe make it a bit more tangible? What are we talking about in the end, and which different forms are existing?
Sure thing, Alex. Before that, I would actually just go back on the question, as we just heard, why do we need programmable euro for particular paper use cases? In that sense, very provocative in a sense, and maybe contrary to that, what Marcus said. I think for the initial relationship, we don't need it, because we have SEPA Inst. And SEPA Instant basically has an instant settlement function within, and we have centralized ledgers in a sense that we have Azure cloud systems where you can orchestrate payments already now. So basically it's just a transmission of using PSD2, using basically the bank infrastructure we have today to basically settle the amounts. It only becomes viable once you think further about the use case, and once you integrate other parties, such as third-party financial service providers as insurances, that they also need to participate in the same system. And once you establish that system with a more complex relationship, not only between two players, but 3 or 4 players, a digital euro is the only way of basically integrating the bank again as on the forefront of transactional services, because right now we only have PSPs on that end, basically deriving the instant payment mechanisms into the market. Having said that, answering your question, Alex, I would definitely say there is several kind of options. So we have e-money on chain, which is a derived system already for 2 years. There's startups such as Monerium, and I think Radko already explained the form of e-money. on the chain. We are discussing basically central bank digital currencies in various forms. So we have basically central bank digital currency directly emissioned by the central bank. Then we have what I call SCBDC, but what is essentially a commercial-based DLT money, a commercial money-based DLT money. So basically a standard which is derived between all the different commercial banks, who actually enable a digital euro standard, which is the form number 2. And I think number 3 would be options such as Libra, in a sense that Libra is, from my perspective, a payment service provider, not an own network, but basically deriving programmability and functionality on the existing euro, basically just in their own network system. So this is the third kind of form which I would highlight. From my perspective, e-money, at least in our use cases, what we are using it for, would not provide the scalability which you need for the system due to the regulatory approaches, whereas only one bank being able to emission and basically they take the money again in. And
so Max, give me a second, hold on that, because I definitely wanted to talk about this, the advantages and disadvantages of these forms. Let's just quickly summarize what you've just said. So I also see these possibilities, maybe to put it into a bit of a bigger picture, right? We have forms of the digital euro that are offered by the state, the government, which would be a CBDC, or by the central bank in the end. And we have possibilities that are offered by the private sector. And these are e-money tokens. These are stable coins such as Libra. And this would also be something like an indirect CBDC where the private sector plays a very big role. And I mean, we have also someone here with Lucas today who is part of an institution which decided to offer a private version of a digital euro. So maybe, Lucas, you can give us a quick overview what separates your solution, which you are offering, from something like a CBDC. What are the differences? What are the advantages and disadvantages?
Yes, sure. So the solution which we developed is what you talked about, the e-money on chain, which is issued by a credit institution. We developed this module together with Bitbond, and it's based on the Stellar blockchain. So I think one of the first differences to central bank digital currency is that our solution is live already and can be used as of today. Furthermore, as I've mentioned, it's on the Stellar blockchain, meaning decentralized and public blockchain. And this is probably one of the biggest differences to what we can expect from central banks, because I think that it's unrealistic to assume that a central bank digital currency will be based on a blockchain such as Stellar or Ethereum. And I would say that we will see some kind of private blockchain which is run by a small set of validators. Therefore, we will have a different IT infrastructure which the money can be transferred on. And this way we lose the advantage which Radko has already talked about, the advantage that we put the payment transactions and financial products on the same blockchain or on the same IT infrastructure. This means that our solution will be compatible with the smart contracts from Stellar and in future with smart contracts from Ethereum, whereas the central bank digital currency would need some kind of bridge solution in order to interact with a public blockchain.
Okay, great. So before I play a bit the role of the devil's advocate, let me first congratulate you on this achievement, right? I think this is a very important step you have taken there. So, but the question of this panel is, of course, what are the hurdles that still exist for a digital euro to go live? And you're telling me, oh, we already have a digital euro that is live. So the question is now, does this euro you are offering, is this already solving all our problems? And Max was already starting to argue why a solution as you're proposing might not be the final solution that solves all our problems. And Max, maybe I hand over to you again and you can elaborate on that a bit.
Yes, exactly. So what I see as a most demolishing point on e-money on chain is basically the scalability between the banks. So what we actually would need is interoperability, because between the banks to actually achieve a scalability. If we think about use cases such, for example, we heard Siemens today, we had Porsche, we had all of the big players. Once they basically put pressure on a balance sheet, and basically by having e-money on chain, you basically need to have the asset locked in your balance sheet and put the pressure all on one bank. I think that one bank definitely will break. If you have Bosch, if you have Siemens, and you have all of these players, you basically create a lot of liable assets which are like actually frozen in your account. First of all that, and second of all, as I already mentioned beforehand, like the interoperability between banks will actually be a decisive factor. Because what we see mostly in implementing our use case currently, our live use case, is that once we work with established players, established banks, also the clients are more intrigued to actually use this integration and actually be able to start the conversation on the right manner, in a sense that like all of the players want to integrate the solution and will want to use the solution between the several banks. So I see the points of fungibility or missing fungibility and missing standardization as major points of like major disadvantages of e-money on chain. Nevertheless, obviously it has its disadvantages as already outlined by Benjamin and Radko. In a sense that you can actually use it today already. You can just use it for several POCs. But I think once we go live, we need to have like established regulatory infrastructure and the banks participating in that system in order to have a scalable and literally up and ready live solution.
So I would like to give Lukas and maybe Radko the possibility to respond to that. So when you were approaching this project, right, which thoughts were leading you into choosing an e-money on-chain? And are you also thinking about a concept that maybe has these multi-bank capabilities which we maybe need in the future? Or is it even possible to go from your project to a version of the digital euro that is scalable and can be used across various banks?
So I would say that our solution can already be used in order to transfer money between different banks. All they need is some kind of blockchain wallet. And if I understood you correctly, you said that there will be a risk factor due to the fact that the money, the fiat money is held in a bank account at our bank, and that we issue the token. So the way we structured the solution, the money in the escrow account will not be part, like if the bank would go insolvent, this money would not be part of the affected assets. So it's actually very safe.
Yeah, and to add to that's also, by the way, the reason why it's structured as e-money, right? If you look into the e-money regulation, and you will see that you have to hold the money in segregated accounts. And the other aspect of compatibility, I think by Bankhaus Vonderheit issuing their digital euro on a public permissionless chain, that's the highest level of compatibility that we can achieve today. If it was done on a private chain, like on a R3 Corda installation, it would pretty much be a proprietary solution. But exactly due to the fact that it's issued on Stellar, together between Bankhaus Vonderheit and us, we have already received a lot of requests whether this stablecoin could be utilized also in other applications. And I think over the next 4 to 8 weeks, we will already see third parties using it beyond just the internal settlement of Bankhaus Vonderheit. I'm not saying this is a perfect solution, of course. If there was a real CBDC out there today, ideally on a public permissionless protocol, I think there would be no good reason for a commercial bank to issue their own digital euro. But the reality is it doesn't exist yet. We'll probably have to wait for a few more years until we can use it. And until that, I think the best solution that we have is a commercial bank issuing a digital euro as e-money, because both from a regulatory standpoint, but also from a technological and compatibility standpoint, I think as of now, this is the best solution that can exist.
Markus, you have offered us your view on various possibilities to handle these payments on-chain with a bridge solution or with an actual euro on-chain. I would be interested in your take on, do you think e-money is now a very good solution maybe for the next couple of years before we have a CBDC, or do you think there will be some other intermediary step we might be using in order to handle these use cases?
Yeah, this is exactly the point that auch Maximilian was mentioning. Like a SEPA instant is quick enough for most use cases, and so one thing is like to bridge to like say existing systems, because I mean It simply works. And the other thing is like, if you want to have like the programmability and the payments in the same system, you're going for an e-money system. So this is something as Rudolf is mentioning. So you can have settlements in the same system. You can program your payments, and you just build up. You get commercial bank money into your system, and it works. I mean, there's regulations for that. And for central bank money, digital currency, I think it's a little bit more complicated, because I don't think that would be like it will be on a public blockchain or something like that. I think central banks, they prefer more like a centralized systems. And once they have a centralized systems, I mean, you have to build bridges again, and because you have your use cases in other networks where you need certain speeds and where you need your money. So you have to build these bridges again. So I don't think that you will have CBC on a public blockchain.
I have one more question about the e-money on-chain. My question is, what is the difference, if there is any, to the stable coins that are already existing, especially in the US, so Tether, for instance, or USDC? And second, so first, is there difference? Second question, do you think there will be an exchange rate between your e-money token and the euro, similar to the exchange rate that exists between existing stablecoins, such as Tether and the US dollar? Lukas or Radko, whoever wants to go for that.
So I think there are very big differences between our solution and stablecoins like Tether. And this is mainly due to the reason that our company is, first of all, a fully licensed bank, which is based in Germany, and the holders of the token do have access to financial statements which prove that the money really exists. And sorry, what was the second question?
So the second question was, would there be an exchange rate between your e-money token and the euro?
So I don't see a reason why there would be an exchange rate, because this would imply that the token is more or less risky than fiat currency. And as I don't see a difference in the risk, I don't see a reason for an exchange rate.
Max, you're looking a bit skeptical. Did you want to?
Yeah, I just wanted to add on that, because I just tried to follow up the conversations. On the one hand, we just heard that we have an entirely decentralized system where we can gain advantages by using like a kind of a stablecoin e-money on chain. And now we're going back to basically being, okay, so we have a regulated entity sitting at the very beginning, which is kind of like, in my point of view, to be the devil's advocate in that sense, kind of like contradicting, because we have on the one hand, like right now, the regulated entity, which producing e-money and basically gives out this e-money in a decentralized network in a sense, which, or with a use case, which is from my perspective also fulfilled by Tether or MakerDAO. So from my perspective is, again, the question here, why don't we start to rethink our current financial system in a sense that even though we have a kind of a private chain, which has obviously their disadvantages, but also their advantages, as we see by Libra using it, and also Corda like on the rise currently, also in the implementations. Why don't we think or rethink the commercial bank money standard and put the private initiative first, and not like try to focus too much on central bank digital currencies, so state-owned currencies, but rather from a private initiative, so all private banks in Germany to issue a standard where it can like basically solve and create a lot of advantages in that end. That's basically from just a question which just arose in my head.
So related to that, and this question, I believe, goes to Radko, I wanted to talk about this big issue of interoperability. So you, for instance, now have chosen to use a Stellar blockchain. There might be other banks issuing their e-money tokens. Then there might be something like a CBDC. Which role does interoperability from a technological point of view play in this respect? And do you think this could become a major problem in the future?
Well, I would say the opposite to interoperability is fragmentation, right? And right now we're in a market phase where it's relatively fragmented, right? There are first institutions like Bankhaus von der Heid and a few others that are kind of doing real life experiments, you could call them, of several forms of digital money. But I think in the next 5 years or so, we'll see one or two standards emerging, and maybe a few larger banks will issue their own digital euro that have a lot of market power, and then maybe others will join their solution, right? So we're currently also talking to some of the largest banks in Germany and consulting them in what is the best approach in terms of technical standards and in terms of also economic and legal design of a digital euro. Of course, an e-money token on a public permissionless chain is not necessarily always the best solution. Right now with von der Heid, we think that once it's used, maybe in a year from now, when we will be doing this conference again and we will having a similar panel again, we'll be able to show where it's used, what is the transaction volume, and then we will see what is the best approach. But yeah, right now, I think a lot of different institutions are playing around. Not everything is compatible and interoperable right now, but I think in a relatively short amount of time, we will see what is the best solution, first of all. And then once the market has kind of decided on that, what is the best solution, then many others will follow that, and interoperability will kind of happen by itself, simply by, many other financial market participants using this solution that has proven to be the best, so the one that is simply most popular.
Mm-hmm. So maybe I can really quickly give a little bit of insight how we at Deutsche approach this topic, because we believe that interoperability is one of the major obstacles, right, for a euro to go online. And this is also why we are a bit hesitant to issue our own e-money token, because we believe it's really important to do this together, at least as a German banking sector, and agree on one standard, right? I know that this is extremely difficult. I mean, in the end, it should be a European standard probably, right? So this is really tough. So first, I like the idea of using open standards as you do it with your e-money token compared to private blockchains. And the second problem is then, and this is something I also wanted to mention, it's not only that we as a banks have to agree on which technology we use in order to offer a private form of the digital euro. It's also our customers that have use cases such as the one presented by Markus, and they are also using different blockchain technologies, right? So the insurance sector is very much into Corda. Other sectors might be using Hyperledger or Ethereum. So it's not only the problem of interoperability between different forms of the digital euro, it's also the problem of interoperability between the digital euro and the use cases that are actually used which trigger the payment, right? So I believe interoperability is a huge topic which will probably become one of the major buzzwords in the next year.
If I may just make one remark quickly, sure. I think it will solve itself, because if you as Deutsche Bank were to say, well, we established this standard now and it's simply out there, we don't wait until we coordinate with 5 or 10 other banks, which I personally believe will take you some time, let's say, right? If you go out there and say, well, this is our standard, feel free to use it, feel free to criticize it, maybe this won't be the standard in 2 years from now, but now there is something out there that can be tested, then others may decide to follow if they agree that this is a good way to approach this, right? So, I think sometimes it takes, a large institution to make a bold decision and say, well, look, this is what we propose. Feel free to use it. Maybe in 2 years we will be successful and many others will use it and interoperability is solved. If we're not successful, maybe we will be happy to join someone else's solution.
I mean,
Markus.
Basically, just if I can just add up on that,
really quickly, Max, because then I wanted to hand over to Markus.
Yes, obviously, basically there is already standards created. Like look to LBBW. We're working with LBBW on that end, because for the very reason there is already standards being deployed, and it's just a matter of standardization and the talks in between banks. That's it, Alex.
Thanks, Markus.
Yeah, interesting discussion. Standards is really the first thing you have to do. But it should be also technologically independent. So you build a standard, how things work, how processes are, and then you can easily adapt these processes or these kind of standards to kind of different blockchain DLT solutions. Can be private, can be public. It doesn't matter. So you have to first work on that. I've seen that in a lot of other industries where you first say, okay, you're building a kind of abstract, framework of, say, for the digital euro, and then you can adapt it in different kind of blockchains. And I think then also interoperability comes by itself. It's just bridging two things, and if you know how they work in the two systems, and they work in a really similar way, you can just map them to different use cases. So this is where I also see the kind of future. We have one standard for a digital euro. Somebody has to define it, or a consortia is defining it, and then you're using it in different use cases, because each use case can use different kind of blockchains. There won't be, say, a single one. It will be different ones. So in the industry, I mean, people are concerned, like, say, about data privacy. So they won't use like public blockchain. So they keep themselves really far away from that. So they want to use something like, I don't know, Corda, Hyperledger, and so on. And if you have a standard, you just adapt it to it, and that's it.
Okay, I like this optimistic attitude. The time is running out, so let's do maybe a quick final round. Everyone, 30 seconds. Look into the future. We were now talking a lot about a private solution for the digital euro, and there will be a CBDC coming at some point in the future. How do you see playing this out? Will we only be using a CBDC as soon as it is here? Will there be a coexisting of different forms of money? Maybe Marcus, I start with you really quickly. Everyone, maybe 30 seconds.
Yeah, I believe in the coexistence of, say different forms of money. So I think there will be a CBDC. It will probably take some time, and I think that central banks, they don't focus on all these kind of industry use cases, and that's why there will be, say, below that there will be, say commercial bank money with different use cases and different networks.
Okay, Max.
Short-term view is definitely going to be like a bank standard, so it's going to be like an SCBDC or like a commercial bank money standard in a sense. Also short-term, I think within the B2C sector, I think LIBOR will gain as PSP, like, some kind of traction, definitely, because why should they be awarded to go to the generic market or general market? And then long-term view, I think we will see a central bank digital currency. It's just depending then on the use case, what they or how they will actually redefine the economic standards due to all of the risks and challenges. And that's why it's going to be long-term within the next 5 to 10 years from my estimation. So short-term, like commercial bank money, digitized, in a digitized euro format, and long-term, it's going to be central bank digital currency.
Thank you. Radko.
I believe and I also hope that we will see multiple solutions, because by the time a CBDC will be issued, the market, I think, will be used to using some forms of a digital euro issued by commercial banks. And I think the moment a real CBDC will be there, these solutions won't go away because they will already be established to a certain degree. But I still hope that there will also be a real CBDC, because then the market can use different types of digital money for different use cases, wherever is the best fit. And I think for many years, we will see several different types of money. Just like today, we have several different types of payment service providers.
Okay, thank you. So we have to wrap up. So Lukas, last words.
Yeah. Yes.
Do you have to add anything?
My opinion is very similar to the one of Radko. I think it will take at least 5 more years until we see a central bank digital currency in Europe, so a central bank digital euro. And also, I think that there will be several forms of euros coexisting. So one will be the blockchain-based central bank euro, one will be the traditional euro, there will be cash, and there will be e-money on chain, and probably some others as well.
Okay, thanks a lot for this interesting discussions to my panel, and then I'm giving back to Manuel. Thank you.